Anna Botin, as always, a great pleasure to have you on the program. So thank you so much for taking the time. There's a wave of consolidation in Spain. Do you ever feel like you're not taking advantage of these low valuations? Were you ever tempted to try and buy something?
Hi, Francine. It's great to be with you. So I've said many times, and we're still the same. We're still thinking the same, and that's we are comfortable with our scale. We are comfortable with our capacity to invest. So we're not contemplating participating in consolidation in Europe or Spain. We have a lot of organic growth potential thanks to this global scale, relationship with customers. And as you know, we announced it's a very important strategic change, a pan-European operating model. And this will deliver efficiencies with common products, regional management across Spain, UK, Portugal, and Poland. So the goal here is to deliver profitable growth across Europe by focusing and helping customers' needs in a better way, to leverage our global scale. But very importantly, this is about capturing new growth opportunities in all the business areas. And you've seen a couple of days ago, we've announced some tech acquisitions. So that's going to be the focus from here on.
But you will have gone from being the largest bank in Spain to, I think, the largest bank, if everything goes through and everything goes ahead. How important is it to be a dominant force in your home market?
So, whether we're second or third in Spain, that is not as important as the fact that we have around 20% market share. And we're not a Spanish bank. We are a global bank, with very relevant size across Europe and the Americas. And today's technology allows us to leverage that across our platforms. So this is the key for us now. Again, it's not a Spanish bank, it's a global bank. We have 145 million customers. What we need now is to actually deliver for those customers as one. And so this is the key change from a few years ago. Global platforms, and we're working on our global payments platform as the backbone for all our banks, will deliver on a scale which is actually at the level of the second or third largest bank in the US. So this is the key. There's a change in paradigm, and we're going to lead that.
I want to come back to the US in a second, Anna, but overall, if you look at the digital bank, which is how you want to grow, you want to go digitally, can you actually make as much revenue in this platform as a more traditional bank?
So at the end, it's about how we see ourselves. And so Santander has a very clear mission, which is to help people and businesses prosper. And today's new technologies combined with our fortress balance sheet allow us to deliver on that mission at scale. And yes, deliver profitable growth. What's happened with the pandemic is that we have 50% of all sales of all products across the group in digital. So this is super important combined with a very low volatility in earnings. We can cover that if you want. But we've been delivering 1 billion euros per day during the pandemic of loans to customers. Again, without technology, the investments we've made in the last 5 years, without a strong balance sheet, this would not have been possible.
Does it make sense to follow BBVA and sell your US unit?
So first of all, I want to say that we, in the US, again, because we are now beginning to leverage our global scale, but also because of the businesses we have in the US, we are in a different league. And there's three very important points on the US. First, it remains one of Santander's most attractive markets. It's not just large, it's 1/3 of the banking market, it's profitable. Second, we have a strong track record. So we've been improving our profitability in the US, doubling profits 2017 to 2019, so pre-pandemic. So it's actually above the cost of equity. This is very important. And the third, of course, is that we continue to build on this success, and we are on track to meet our Investor Day targets by 2023. If you look at what we delivered, and this is really important because it adds to the diversification, as of October, we were about the same level of profits in dollars as last year, in what has been a very difficult year. So, and we will now leverage our technology, and we're looking at how Open Bank can help us also change the paradigm in terms of how we run SB&A, which is where we have more work to do.
So Anna, strategically, The US is what, a good buffer, or is it something more to Santander?
US businesses for Santander is about 17% of our capital. It delivers, again, a good return, and we have committed to having returns above the cost of equity by 2023. But very importantly, it builds into our corporate and investment bank across the world. It builds into our auto business. We're the 5th largest auto lender in the US. And very importantly, on the mid-size market, mid-size companies, again, it leverages on the global Santander network. What we need to now execute, and this is something we were not able to do until recently, we now want to basically run the US on a different paradigm in terms of the technology and really bringing in it as part of the Santander technology platform.
Does Europe need a bad bank like the ECB's and RIA has suggested?
Well, I mean, there is many different approaches. Definitely all banks have been making provisions, including us, that have not yet been realized. So we actually have not seen those losses, even though we have provisioned in our balance sheet. Those losses will come in 21, 22. Again, provisions are there already. It's very difficult to know, but my view in terms of the macro is that compared to a few weeks ago, the world looks much better. What's important for investors, but it's also important for our customers, our SMEs, mid-sized companies, is to have some visibility as to when the pandemic is going to end. And so, most would agree that May, June of next year is a reasonable date, to expect some kind of return to normality. And this is very important in terms of loan losses, because it gives you, if I'm a small company and I'm saying, do I close, do I stay open, do I invest, I don't invest, and I know it's 6-8 months more, it's very different to having no idea when this is going to end. And so I do think we're in a better place, much better place than a month ago. My view is that the economy in 2021 will surprise to the upside.
But overall, I mean, some regulators are worried that actually there's just not enough bad loan provisions, and defaults can typically happen with a laggard. How comfortable are you that actually you have enough put to one side if there's a big wave of defaults coming?
Well, what we have now, as I said, much higher visibility. We know, 2/3 of our moratoria have expired. In countries like Brazil or Mexico, almost 100% have expired. So we already know what customers are going to be able to do or not do. In terms of loan loss provisions, we've added a significant amount until September. We actually guided to better cost of risk in September than we did in July. Even in the second lockdown, we're going to have 2-3 difficult months, but we already know what bad looks like because we saw it in Q2. So we're able now to have some realistic numbers in our models. In the case of Santander, we could double the provisions we actually have made for COVID and still be with it some slight profit. And if you go beyond that, we'd have 18 billion euros more of profit, of buffers, 18 billion more buffers before we have an issue with capital. So, and this is more or less the case for many banks across Europe and the US. And so, I think the scenarios, the doomsday scenarios that we had a few months ago are now not realistic.
And when you look at some of the things out there, people say it's very difficult for banks to call more for more support from governments, whilst at the same time asking to be able to pay for dividends. I mean, is there something to be said about this being a difficult proposition?
Well, first of all, banks did not get support from governments, Francine. I'm sorry to correct you. The economy and our customers got support from governments because this was a health crisis, which is the government's responsibility to take care of us. So that's very important to clarify. Second, we must find a balance between being prudent. Banks have huge buffers. I gave you a number before for us, 18 billion euros of buffers, and we can double bad loans that we've made to date for COVID before getting into zero profit. So we need to balance that with the support for the economy and being able to raise capital. So let me also leave clear that I think the decision to pause dividends was understandable. We might not agree, but we understand it 9 months ago. when we knew a lot less about the virus and its consequences. Again, I mentioned earlier, we now have much higher visibility. As the outlook improves, and it is improving, we need to ensure that banks become investable again, which means protecting capital, which is higher than it's ever been, and ensuring there is a supply of new capital, provided banks have the balance sheet strength, which we do, to pay dividends, while also counting to perform their primary function, which is supporting our customers.
Do you think the ban will be lifted next month?
I'm sure you know more about that than I do, but everything we hear and that has been said publicly is that they will be reviewing at the end of this year, so sometime in December, but there's nothing certain yet.
Talk to me a little bit, Ana Botin, about what you're expecting from 2021. How confident should we be about a vaccine? How much will that help business? What does it mean for government support for furlough schemes? And that's what I was suggesting, not support to the bank, but just trying to keep the economy going. And will we have a new social contract?
Well, just briefly on the vaccine, again, it's too early to declare victory, but they're clearly very encouraging signs. We base our internal models and our business plans on IMF and OECD forecasts, which anticipate a recovery in 2021. Vaccines certainly help support recovery expectations. But again, we're well capitalized for a variety of scenarios. And so as I tell my team, we must remain focused on what we can control, supporting our customers, and communities, and keeping our employees safe. In terms of what the pandemic means for us, I think there's two things, and I'm happy to expand on that. The first is a very important, I'd say, strategic or structural issue, which is how do we build a new sustainable and inclusive social contract, right? Bringing together public and private sectors to really rethink competition rules, tax, regulation rules. I got message from Davide Serra. He's one of the biggest investors in banks. And according to his data, financial companies, banks in Europe are paying 40% of all corporate tax. And we are having to restructure because obviously competition is very high. 50% of our customers at Santander are now buying all their products online. That means we need to change. So we need to continue focusing on what it is we can do as a private sector. And it would be great if we can contribute with other agents in society and governments to really rethink what the world of the future, what Europe of the future looks like. The second thing, and I've heard just a few minutes ago on Bloomberg about the US and Secretary Mnuchin saying about how the US thinks about fiscal support. I do think governments have to continue to support people and businesses. This is a health crisis, it's government's responsibility. We cannot just rely on monetary policy. Withdrawing support now, I said it the other day, would be like closing your checkbook during a war. So we need to continue helping, at least for the next 6-8 months, people and small businesses, and this is crucial. I guess the second thing, and I'll stop there. Yeah.
No, I was going to continue.
No, I said the second thing from the pandemic, which we've all learned, is how important we as a person, we as a country affect the rest of the world. And so this is the case for the virus in these last few months, but it also affects how we all think about sustainability. And that's the other very important, let's say, lasting effect of this pandemic.